Let's quickly give you an update now on the markets. The JSE expected to have a positive session for the second day today, taking its cue from world markets where investors' concerns over the potential reduction in U.S. monetary stimulus appear to be on the back burner. South Africa incorporated stocks such as banks fared well on Monday, as did the mining stocks, which were battered over the past week in line with weaker commodity prices. Locally, Statistics South Africa, that's a very important one, today expected to release the latest unemployment rate this morning. We are going to preview that data as well and talk through some of the leading market indicators with Jimmy Moyaha. He's an independent markets analyst joining us now. Jimmy, a very good morning to you. So ahead of the release of the latest unemployment figures by Stats SA, how have the markets opened this morning?
Good morning, Toli. Well, the markets have opened quite positively. I mean, the JSE top 40 is up about 1.3%. You've got some good performers there. Sasol's up about 2.5%. Naspers is up about 4.5%. And so the Rand has also performed quite well. We saw it yesterday sort of start the week at 15.30. It started at the 15.12 mark. So overall, from the South African front, a rather positive start to the week. We are expecting that to continue in some respects, in line with some dollar weakness that we've been seeing in the last couple of days.
Yeah. Are you expecting any good news as far as the employment picture in the country? The last figures were not so good.
Well, in reality, I mean, anything below the previous figures is going to be good news. I mean, our unemployment rate, the official rate, sits at 32.6%. The previous figures that were reported were about 7.2 million people. So I think anything positive from that respect would be much welcomed news. I think it might be a bit of a mixed bag of results. We've seen in the past that our unemployment figures and our results around that have had little to no effect on things like our Rand. Just because of where our unemployment rate is and how high it is. It'll be interesting to see how the figure comes in, especially off the back of what Minister Lindiwe Zulu has now tried to propose with the new bill that she's looking to pass. So I think the figures today will speak more to the likelihood or the viability of a bill such as that in light of what the country is going through at the moment.
Yeah. I speak to you, Jimmy, on the back of the closure of the Bio-Africa conference that is taking place in Durban. In fact, the Minister of Agriculture, our Minister of Agriculture, is delivering closing remarks there. And I'm asking you this on the back of what the analysts have flagged, particularly in the agricultural sector, as one to watch, given the unrest which affected the sugarcane industry in that region of KwaZulu-Natal. Your thoughts there?
No, certainly. I mean, the unrest that happened in KwaZulu-Natal and Gauteng has definitely had a significant effect on multiple industries, and the agriculture industry is no different. I mean, we know that from a production perspective, a lot of the agricultural produce that we do, not just from the sugarcane perspective, but from our citrus fields and that sort of thing, all of that is exported. So a significant effect on our agricultural sector results in a significant effect on our production sector, results in a significant effect on our exports. It's a whole value chain effect at the end of the day. And so the concerns around that are very real concerns. And they also not only filter through to things like exports and revenues there, they filter through to things like jobs. If we're not able to meet those targets, you could see farmers that are unable to sustain their workloads or their staff members starting to pull back on that as well. So it has a whole ripple effect. It's not just an isolated incident where we say there was some unrest, it did affect one or two farms or one or two sectors, and nobody else is affected. It affects everybody down the value chain in some way or another.
Yeah. Jimmy, going back to the quarterly labor force survey, the jobless rate, which comes as a result of the unemployment, which has reached historical highs in the country, at least in the first 3 months of 2021. Has government and the private sector, have they done enough you think, to add any more jobs in the intervening period?
I don't believe so. I don't believe that we've seen enough employment creation from the government in respect of that. And this is largely off the back of the fact that while we have been seeing some positive performances from some companies locally, some positive performances from the sectors when we look at sector growth, what we aren't seeing is we're not seeing confirmations of increased vaccination levels in terms of meeting those targets. And the longer we take to get those done, the more it has an effect on our ability to return to full economic activity. And that's going to then have a ripple effect on companies not being able to sustain some of their workforce, both private and public sector. I mean, the government for so long has been talking about measures it wants to implement to encourage economic growth, to encourage development, to encourage employment, and now the tune is starting to shift towards a basic income grant rather than actually implementing some of the things that they've announced in the past. So I don't think we'll see very different figures from what we have seen in the past. We might see the unemployment rate, the jobless rate sort of fluctuate by a couple of % here and there, but I don't think the figures will be reduced significantly enough in this report that we're going to see at about 11:30.
Jimmy Moyaha, independent markets analyst, thank you very much for your time there.